Adobe is probably one of the most talked about stocks right now in the market. So we're going to go ahead and take a look at some of its numbers, the metrics. We're going to see the intrinsic value. I'm going to give you a base, a median, and the best case scenario for the stock. And we're going to see if this would be a good investment to add to our portfolios. Now, if you've personally never heard of Adobe before, you probably have heard of some of their products like Photoshop or maybe even Illustrator and Premiere Pro. This is a company that is used a lot for videographers, photography, for anyone pretty much in the artistic space, creativity, and all that good stuff. And if you take a look at the stock now, it's currently down 33% year to date, which is about $172. And this is due to fears that AI can take away pretty much the whole business model of Adobe. But let's see if the financials back up that fear. Adobe, if you see this little line right here, this is the intrinsic value, what it should be worth. And then this little line on the bottom, it's the current price tracking that intrinsic value. But this is not the intrinsic value we're going to be taking a look at. We're going to look at something else as well. But according to this, Adobe is currently undervalued about 27 to 30%. Now, if you've been following the channel, you know this is the type of divergence I love to see in a company when I start investing in them. And what I mean by that is once the company starts increasing in EPS, but the share price just keeps on falling and falling, this is definitely something that catches my eye. Reason being is, how is it possible that a company is making more sales yet their share price is dropping? Obviously there might be something else going on, so you have to take a look into it, so which is what we're going to do in this video. But this is already a pretty good indicator that the company might be safer than it's actually making it seem by the stock price. Now, if we take a look at these metrics real quick, we're going to be comparing the revenue to the total debt to the PE ratio of the company. Revenue being the blue line, as you can see, steadily increasing over time. The debt level has been decreasing and then it started increasing again. This is due to acquisitions and reinvestments, and also the new buyback program, which they are reinvesting a lot in the company. They're buying back a lot of their shares because management believes that the stock is undervalued. And if we take a look at the PE ratio, which is this little green line right here, I mean, it's even all the way down to the bottom. And then just to back that up a little bit more, if we take a look at the financials, revenues up 11%, operating income is up 16%, net income is only at 2%, and their free cash flow margin is at 13%. Now, of course, we want companies that have more assets than liabilities. That is the case for Adobe. They have $28 billion in assets, which is not a lot when you consider this company has a market cap over 100 billion. Reason being, most of their stuff is online, therefore they don't have a lot of infrastructure, a lot of real estate, stuff like that. And then they only have 17 billion in liabilities. Now, if we take a look at the latest earnings report, we can see that even with all this fear that, oh my god, AI is going to take over Adobe's business model, which is legit, it could be possible, it's a good statement to have a debate about. But as you can see, they beat the earnings by 0.13% and they beat revenue by about 79.47 million. Now, if we take a look here comparing 2025 to 2026 fiscal years, we can see that the EPS are expected to increase from 20.76 to 23.30, and for the revenue from 23.66 billion to 25.85 billion. That seems more than well for a company that's going to be overtaken by new technology such as AI. I think there's a lot of fear, which makes sense, but Adobe, like I said, is a company that has a lot of software. So if anything, I believe, this is my own personal opinion, that they're going to incorporate AI and its usefulness, help their company make their product a lot better, therefore increase the sales and just keep on making more revenue. Now, I mean, they have a beautiful free cash flow margin of 41%. Keep in mind, this is still taking into account their buyback program, which I'm going to show you now in a second. And if we take a look at the rest of the company's fundamentals, I mean, we can see gross margin 89%. If you've been following the channel, again, you know anything over 40% is very good. Net margin at 30%. Free cash flow, we just saw it, 41%. Now, again, this is not the intrinsic value we're going to be taking a look at, but this is the analyst forecast. They have a low forecast of 282. If it drops to 282, I think I'm selling my house and buying Adobe. Not financial advice. The average cost is about $473, with the highest forecast being $635. Now, unfortunately, Adobe doesn't pay a dividend, which is a bummer, but I mean, I still like the company. And if we take a look at the buyback yield, you can see it's currently at 4.67%. This is the amount they're buying back in shares. Now, if we take a look at some of the competition, we can see that Adobe is one of the few companies currently undervalued. I mean, there are a bunch of great companies here like Microsoft, Salesforce. Those are the two that I'm the most interested in, but from those two, the only one currently undervalued is Adobe. Now, what you've all been waiting for, let's take a look at the intrinsic value. We have a base case for this company that the stock would would be worth about $498, meaning that it is currently undervalued at 33%. We have a worst case scenario of the stock being worth $388, meaning that the stock is currently undervalued at 13%. And then in the best case scenario, the stock would be worth $656, giving the company an undervaluation of about 49%. So after seeing this metric, after seeing this chart, the stock going down, what do you personally think about this company? Do you think AI is going to take over its market, or you think they're going to incorporate AI to help their business grow even more? I'd love to hear your thoughts. Let me know in the comments below. If you enjoyed the video, don't forget to smash that like button. Don't forget to subscribe. And as always, I'll see you guys on the next video.